Deryck, good to have you with us. Okay, so let's get your view on the market today. Profit taking went to a record high on Friday. Just moving in line with market sentiment today.
Yeah, and I think after Friday's run and generally after last week's run, a bit of profit taking was due, specifically in the resource space. So I think after the quantitative easing announcement, I think the market's obviously quite bullish on the back of that. We had a very, very strong day on Friday, so a bit of profit taking was due, and just a little bit of the hysteria now starting to wane away as we settle into to let these markets find the true levels. But still, the sentiment remains quite strong, and I think this market could still continue to push higher from these levels.
What sectors are going to drive that?
Look, there's been a lot of question and talk about the possible switching out of industrials and into resources. That's definitely been a theme that we've seen last week. Whether that's going to prevail, I think the bigger economic picture is going to dictate that, where we've got interest rate announcements coming up and potentially more interest rate cuts down the line. If that's the case, these retailers could still be attractive investments, although you've seen them re-rate slightly to the downside. They could be offering slight buying opportunities, but I still think that in light of the quantitative easing announcement, I think resources are going to start becoming attractive investments with all the news that's been out on the mining sector, with the platinums out there. I think that once that settles, you are going to start to see a bit of a tick up in these resources. Fundamentally, they are giving you buy signals, and I think that the results that you've seen out of the key players like Anglos and Billiton have given them nice bases to work off moving forward.
Yeah.
So that should prevail, and I think the market should take it. That should take the market higher.
Let's talk a bit about the platinum sector, because the platinum price slipping back slightly below $1,700 a fine ounce. Just looking at some research by mining analysts from KD's Asset Management, they broke down basically price pressures in the platinum price from 2001 to August 2012. During this period, the platinum price in rand dollar terms, in rand dollar terms, only increasing by around just under 9%. If you include base metals in that and the PGM basket, the increase in that whole basket only increasing just below 4%. And then you've got on the other end, you've got wages that have increased by over 11%. You've got the inflation rate that's averaged 6%. All these cost pressures basically underscoring the fact that the platinum industry at this point in time is looking at zero profitability. And if it gets a lot worse, i.e. wages continue to rise, it's going to become a lot more unprofitable. Your thoughts on those kind of, all those numbers I was throwing at you there?
Yeah, I think you've given the sector a very quick and basic summary in that the cost pressures are going to continue to weigh on the sector. And if you look at the results of the big heavyweights, the Impalas, the Amplats, and the Lonmans out there, they've indicated that costs have been a big issue for them, and it continues to prevail. What one must also remember is that the increase in the platinum price hasn't really been driven by demand, which is always a healthy market sentiment or market environment for commodities. It's really been driven by supply issues, shafts being shut down, and supply issues then causing the platinum price to spike up slightly. So that is still concerning, and I still think those costs are going to remain within that space. So although a bit of excitement in the sector with the platinum price going up the way that you've seen in the last month, I wouldn't get too excited, because these costs are going to continue to weigh on these companies. So the margins are going to continue to be quite thin. I think it's still a little bit early to say this is the time to look at platinum. I think they are looking attractive, and they're probably forming a base at these levels. But I think you've still got a window period of about 6 months until you start to see the next set of fundamental results that could give you some good fundamental buying signals on those stocks.
And of course, Lonmin coming out with their update today in terms of platinum that they are likely to produce for the year. That was below their target. Cost pressures are going to exceed their initial forecast of 8.5%, but we still don't know how this Lonmin standoff is going to end, basically.
Exactly, and I think that at this stage of the game, if you just look specifically at Lonmin, it's really been driven by information flow, and I think a lot of traders looking at potentially buying into a stock like Lonmin at these levels are sitting and watching the SENS announcements to give us updates on what's going on with the Marikana strike. And you haven't got clear foresight as to when that's going to end, when there's going to be a settlement on wages, and when those cost pressures can then be bedded down. then you can fundamentally calculate which way these companies are going to go looking forward. So again, it's a very up in the air argument, and I think it's still probably 6 months early to look at
As
these.
you say, wait for the next set of numbers. Let's talk a bit about Sasol today. Renaissance coming out and cutting their rating from buy to hold. The stock, in fact, one of the outperformers on the top 40, up almost 400 Rand, in fact, today, 398 Rand. Where do you stand with regards to Sasol?
Look, Sasol's always been a good core component to any long-term portfolio, but what we've got to remember is that there's a lot of exogenous influences that can cause the price to fluctuate the way that you've seen over the last month. So the two main fundamental influences is obviously the oil price and the rand. And if you look at the constituents of Sasol and how the company derives a lot of its revenue, it typically is driven by a lot of its exposure within the South African boundaries. Or borders. So if you look at it, it really is a rand oil price. Now, going back about a month from now, when Sasol was sitting at about 350 a share, and you look at the rand oil price, you saw that the rand oil price actually outperformed Sasol to the tune of about 30%. So we've seen that catch up in the Sasol share price at this point of the game. So that catch up's been made. However, these fundamentals are driven by information flow. Again, announcements out of the Fed that causes risk appetite, causes the dollar to weaken and hence, affect our currency. The oil price as well, it's a very difficult one to say, again, unless it's driven by demand. And until you start to see that economic certainty coming back into the developed world, that demand is going to drive the oil price. So look, I like the stock. I don't think you should be chasing it at these levels. I think that if there is weakness in it, depending on what the rand and what the oil price do, you can look to accumulate, but always a good backbone in a long-term portfolio.
Lastly, let's take a look at the retail sector. Foschini seeing some buying today. Pick n Pay. Specifically, let's talk about Pick n Pay because the question marks around the turnaround story there. Would you be buying Pick n Pay at these levels?
Yeah, I think if you've been invested in the retail space and you've had the likes of a Shoprite or a Massmart or these stocks that have done very well, they're, even from a global perspective, starting to look quite fully priced now. And I think if you're looking to keep your retail exposure, it might be a sensible move to maybe look at down weighting slightly in your Shoprites and your Massmarts, even your Mr. Prices, and then look at something like Pick n Pay. But you've got to buy into the turnaround strategy. I still think that retailers are going to be quite lofty for some time, and again, it's going to be dependent on how our domestic economic situation plays out.
But you'd think that Pick n Pay more so than a Shoprite, given a Shoprite's African exposure.
Yeah, they haven't actually bedded it down and got the turnaround strategy as quick as what investors would have liked. So it's all there and on the table to do very well and to implement a good turnaround strategy, but it's just kind of dragging its feet in my mind. So I think if you look at the stock, I'm not adverse to it, but I'm keeping an eye on it and waiting to see how they're going to progress with this turnaround strategy. I still like it if you want to keep retail exposure. If you do see weakness in it towards 42 odd Rand, I think you can put some away and just be patient in that investment.
Thank you so much for joining us today. Deryck Janse van Rensburg, Portfolio Manager at BoE Stockbrokers.